This is the Stock Trading Reality Podcast, episode 33.
I literally laid on the floor that day. I had to get up from my computer and lay down because I was literally nauseous.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host, who has a secret passion for U.S. history, Clay Trader.
I'm pretty excited about this fun fact because it gives me I told you so moment. And I feel like I talk a lot about this Baltimore trip that we did, where we met up with other members of the community. But this was just another good example of how fun that trip was. So yeah, I am a big fan of U.S. history. And in Baltimore, we're Nate Wilson from podcast episode 7 was taking Nate and I around. Nate being the IT guy here at claytrader.com and producer of the show. But we were walking around and then we saw, the Bay and, Nate Wilson, this is where the Star Spangled Banner was written. And I kind of freaked out. I'm like, are you serious? So of course I had to get, my picture taken by it. It just didn't dawn on me. Oh yeah, the Star Spangled Banner was written in Baltimore. And then it came up, yeah, so so I'm starting to talk history. Yeah, so Francis Key Scott, he was in the Bay and he wrote it. And IT Nate and then Nate Wilson no, he wasn't. He was in the fort, you moron. And I'm like, no, you guys are the morons. He was on the ship. Have you ever listened to the lyrics? He's writing about what he saw from the ship. No, you idiot. He was in the fort. So in this day and age, we can all just pull out our smartphones, right? So I pulled it out, or one of them did, and they looked it up. I want to say IT Nate did, because I think I remember the expression on his face being one of smugness, like, oh, you're such a moron, to that of, oh, crap, Clay's right. And whenever Clay's right, Clay's going to make sure you know about it. So yeah, he was on the ship. He was taken prisoner. And I really got to just shove it in their faces. And if anybody has met Nate Wilson, he's a good guy to just shove stuff right in his face because he's always giving people a hard time. So, but yeah, so that was kind of my, big moment of how history pertained to the inner circle, especially in Baltimore. But I love history. I guess I'll just leave it at that. Ches, what about you? Are you a history buff or are you just kind of just whatever?
I'm kind of just whatever. I don't even know. I can't even list the last 3 presidents. No, I'm just kidding. No, I'm not that big into history. But I did actually agree with you though that it was written on a boat. That's just something I feel like I learned a long, long time ago in school, and I was on board with you for that.
That's right. Thank you for the reminder, because I remember when we got back, I was like, "Oh, well, that's not a common known thing." I'm like, "What are you talking about? That's like common known." And I did ask Ches back at Nate Wilson's place. I said, "Hey, Ches, where was the guy that wrote the Star Spangled Banner? Was he in the fort or was he out in a boat?" And Ches is like, "He was in a boat, right? Wasn't he?" Like, he looked at me like it was a stupid question, and it was. So, yeah, I guess if you didn't know that, yeah, he was in the boat. He was taken prisoner. And this is a total change of topic, but I realize I have not done this in a while. But if you're a new listener, I just want to give you a quick little history of the podcast, and that is, at claytrader.com, we have a private trading community, which anybody can join, but it's private, a chat room. And way back when getting this started, my plan was, let's just talk to people from the community. That way we can all inspire one another, share our stories with one another, and, just keep everybody motivated, just give realistic perspectives on, what people have been through. And at that time, it was just, let's interview people from the community. The only difference is the more I thought about it was, why not just make it public? If other people can learn from it, that's great too. So yes, we only do interview people from the community, but that's why we only stick with people from the community. I've had a few questions, why don't you interview anybody else? And that's why it was never really intended to be public in the first place, but we decided to make it public. And it's been quite a few podcasts since I just reiterated the history, because I know some people are probably wondering that why is it so exclusive? That's why. I just want to motivate the community, but if we can motivate some people outside of it, that's awesome. And of course, if you'd like to join the community, you can do that too. So today we have an awesome guest, Dan. And Dan's got a pretty cool job. He's a college basketball coach, and I'm just going to leave it at that. But he travels all around. He's got some really good analogies that he uses, and he's got a fantastic perspective and a very, very up and down journey. But he sure has learned a lot from it. And for those of us in the chat room, we've seen him. And what I like about Dan is he posts his wins, sure, but he's always posting his losers too. And over time, we've really seen that. He sure has losses, and losses is part of the game, but I'm going to let Ches, comment on this real quick too. But I mean, his losses sure are looking mighty small compared to his wins, right? Which shows us, good risk versus reward management.
Fantastic risk versus reward management, and it's all about the ratio. And we were kind of talking about that, in the podcast and actually, after the podcast as well. But yeah, his ratio is where it needs to be, and I think that's what really makes a turning point for a lot of traders.
Yeah, and he's got a sticky note that he has on his computer, which I'm not gonna, talk about right now. But what that sticky note says is very, very powerful, and I absolutely loved it. So let's quit beating around the bush and offering teasers. Let's just get started. All right, hey Dan, thank you for joining us today.
It's a pleasure to be here.
I want to offer some context here just to show, what kind of dedication we have around the community. But Ches and Dan are both out in California, and it is 10 o'clock a.m. right now Eastern time on a Saturday morning, which means for them it's 7 a.m. in the morning, and here they are both here. So to both of you, Ches and Dan, this is good stuff. We must all like talking trading. Is that true, Ches, Dan?
It's more impressive for me. Dan probably is used to getting up early, but yeah, I made it, and that's what counts. I'm here at 7 a.m. It's Saturday. I'm going to get some coffee after this. Everything is well.
Ches is here, but looking at him on the cam, I don't know if he's here. So he's physically here. Mentally, that remains to be seen. But Dan, we were discussing earlier. Dan, yeah, he's a morning person. He's as sharp as it can be right now. So, but yeah, seriously, thanks again, Dan, for joining us within the context of when we're currently recording this. But let's start at the beginning, man. What got you interested in the markets, and when did you finally start to get active in the markets?
Well, that's a good question. It probably started originally when our son took a class in high school. So we're talking back in must have been '07 or so. Took a business course, and part of that course was learning the stock market. So I said, okay, here's what we'll do. I'll put some money in the market, and then you can do with it as you choose, and we'll discuss it along the way. It'd be kind of a real life experience. So. That's where it started from. And then from there, after losing that money, I might add, I didn't do too much with it until probably 2011 is when I first ever kind of got involved myself. With that said, the backstory to that is having watched the market for a long time, I've as a career educator, had a lot of discussions with coaches who I was involved with, worked right next to, who were interested in the market as well. So have been a lot of years of at least paying some attention to what was going on. Most notably, I think back to 1994, when we used to, from 94 to 99, we would sit around and I think if you go back to the history there, you'd find Apple and Google. Google, I think, just began during that time and didn't do anything with it, but watched it and kind of paid attention and had at least a feel for what the heck it was all about.
So you were watching Google back in 94, huh?
Well, and I don't know when exactly I can't remember when Google came out, but it was during that span of, I feel like between 94 and 98 that it must have first appeared on the market. Obviously Apple was around, so so there's some history there.
Yeah, I'm just curious, just because I think that's really cool that you did that for your son, even though the money was lost. But so was it more so your son that lost that money, or because you just gave him reign over it, or was it kind of a combo effort? Who actually kind of, I guess, what did you guys do with that money that caused it to just go to nothing? Was it penny stocks, or what were you putting that in?
It's interesting. I remember PEIX being one of those, and I think that he had an account that obviously they created a paper account in that course, and then I think he mimicked some of that within the account itself. And because of kind of interesting, because of the amount that he had to deal with, which was not great, and so he was trying to buy, let's say, $5 or less type of stocks to be involved. I guess the negative part of that was those stocks were at greatest risk maybe to move downward versus blue chips that weren't going to move as quickly in the time frame that he had to work with.
And I can certainly attest to that. I actually was under the same mindset when I started, in the sense that I was like, oh, I could control more shares if it's under, $7. I said I could buy up to 1,000 shares if it's under $7 at one point. And then, yeah, they're definitely more prone to being a lot more volatile, especially percent-wise. So I can totally see that happening. So that money is lost now. Where do we go from there? What is the next step logically for you? I know you said that unfortunately that happened, but it got you more interested in the market, and you've been kind of seeing this alongside with other folks you were working with. Where did you decide you wanted to put your money to work in the market?
Well, and that's interesting because there again becomes through the process of learning all of this, you start out and your goals probably, at least for me, my goals didn't match up with what I wanted to do. So my first, I tried to recreate this. Unfortunately, my records don't go back as far as I'd like them to, but I believe I started with $10,000 invested, and I bought Costco, Microsoft, Coeur d'Alene Mines, and Arch Coal. And so now you go back to 2011 if you're going to do a history lesson there and look at those. And I remember December of that year being when I first decided, hey, this is where I'm going to go with this. And so I put my money there thinking I was going to be actively trading with these as an investment. And that doesn't go together. Lesson. That doesn't go together.
Yeah, when you said that, I was like, wait a second, investing, but active. I was like, that's good
exactly.
Point.
So after 3 months, and I looked down, and I think Costco moved $4. And Microsoft, it was just kind of trading sideways. And especially those two, because those were the heaviest that I'd purchased into. I said, well, this isn't working. These are supposed to be going up, and I'm not trading. I'm just watching. So time to make a plan change, and then from there, I probably started moving more your direction that you mentioned, Ches. I started moving. I pulled my money out, started moving into buying shares of stock that were let's say not S&P 500 rank, and from there began a cycle of some wins, some losses, but it was very random.
So, I mean, I like how you phrase that, not of S&P rank. So, I mean, does that mean you were in penny stocks, or were you still on, big board stocks, just lesser priced? I mean, what exactly were you, what are the defined less than S&P 500 stocks?
Well, that's interesting. I need to go back here and look. So if at some history, and I'm trying to think where I didn't get into pennies at that time. The first real I would say stock that I kind of researched and traded was Fannie Mae and Freddie Mac. And along the way, hit and miss with a whole bunch of different things. Fannie Mae and Freddie Mac is also when I first learned of Clay, because you were doing videos back in that time frame.
Yeah, that's when those stocks were going nuts.
Well, yeah, exactly. And in fact, I can tell you, I still own my original shares of Fannie Mae, and originally, I purchased at, I believe, 86 cents, maybe 56 cents, Fannie Mae, and then rode that up, and that's kind of where it's kind of interesting, because that's where things go both right and wrong with that particular stock. I had 10,000 shares of Fannie Mae when it went from at 99 cents a share, when it went to over $5 on that run. A day that I will always remember.
That was in 2013, right? Is that
there you
Yep.
go. Yeah.
Yep. 2030.
So
Yeah,
we
May. I'm looking at the chart right
jumped
now.
ahead here. And the only reason I jumped ahead is because to try to fill in the blanks in between will just be, it would be nonsense, you know. So, so I watched that stock go up. I remember saying to my wife at some point we were like 75 grand up, and
Oh man.
I didn't sell, Clay, because I wanted $6.
Yeah.
The
Oh, it's amazing how the mind works. It truly is.
Well, and of course I ended up selling as it was just trying to get out as it was just diving. And if you ever want to Google something out there, just go look at a YouTube video on that rise and dive. And so I didn't sell it all, but I sold quite a bit of it on the way down.
Did you have
And then,
trouble selling? Do you remember? Because I was trading that one, and I remember like it was hard to get out at the bid because there is when it started to move, it was both hard to get in and out because it was just so crazy. Do you remember that too?
I chased it 20 times to sell it.
Yep,
Yes.
that's what I remember. Yeah,
Yes,
it was
exactly.
crazy.
Exactly. So then after that experience, and by the way, I want you to know that I literally laid on the floor that day. I had to get up from my computer and lay down because I was literally nauseous. You know, what did I just do? How could I have done this? You know, on and on and on. And unfortunately, I didn't learn.
Let me cut you off right there, just because
Go ahead.
I promise Dan is not being dramatic. As traders, and I'm gonna have to bring Ches in here too. If you haven't had the nauseous feeling as a trader, then I think you're lying to me because we've all at one point had that feeling. I know I've had it. Ches, have you had that? Can you relate to Dan here in terms of that nauseous feeling in your stomach?
Yeah, Kelly's come in here and said you're blue in the face right now, and I was just like, I'm in way too big right now. Yes, it's definitely something that I think just it has to happen. Unfortunately, it has to happen usually for most people, and it generally happens, relatively early on in the process.
Yeah, I mean, this is not like a video game, folks, where you get to press restart or, start new game. This is your money on the line, and when it all of a sudden, when you're not doing things, and the thing is, think about it, Dan still did well with it. He just didn't do as well, but he was still feeling pretty nauseous. So Dan is not being dramatic. We've all been there before. So I just had to comment on that because I can totally relate to the nauseous feeling and all that stuff, Dan. So sorry to cut you off, but yeah, that was funny, but in I think hopefully a very learnable way for the listeners.
It was, yeah, and you're right. I mean, I'm to say nauseous is almost like I'm almost like downplaying it. I'm telling you right now, I had literally laid on the floor and thought I was going to need to move to the bathroom. But but that therein, there was a lesson there to be learned, and so from there, though, I'm not sure that I got any smarter, because that's kind of a foray, taking those profits, and I moved into penny stock land. How about that? Because what the heck, this Fannie Mae jumped, and again, I a little bit of my mentality was when you come to the market and you're an honest person. You believe that wouldn't a regulated SEC regulated venture everybody be honest as well? And for those of you that haven't watched the Penny Stock Survival Guide, when I finally did, it was like going 12 rounds with Clay punching me the entire time, and realizing that everything that you talked about during that, it was like, holy cow, holy cow, holy cow. Did I make that mistake? I made that mistake, that mistake, that mistake. So I still retain some of those penny stock losers in my account for no other reason, because it's a reminder of what can go wrong.
I like that. I know a couple other members have mentioned they do that just so it just stares at them every single day like, hey, bozo, remember, we're still sitting here, So that's, I mean, especially when I'm sure they're not worth much at all. But I think that's a good little psychological trick you can play on yourself. Just a friendly little reminder that things can go wrong. Do you remember any of the ticker symbols that you might have played? Just because I know a lot
I can tell you that. Yes. Here, let me give you a couple of them. I do remember the first 1,000,000 shares I ever owned was in a supposed mining company out of Vancouver, BC called TAON. I want to say it started as TAO, and then they added the N, not for a good reason. And I remember saying to my wife, I've always wanted 1,000,000 of something. Now I have 1,000,000 of these at 0.000 something, and you'd have thought that I'd learned just one time, but no. Along the way, Melly was another one that ended up getting me. And some of these are within the last 2 years. It wasn't. It wasn't like there was one. I think Melly was the one that finally just pushed me away from that completely, and I said, okay, this has got to. I've got to do something different, and I think that's you go back to 2012, 2013 is when I really hooked up with the IC. Although I was hit and miss, it took me a long time to convince myself that I was really an idiot. And maybe that's a trait that comes from being able to succeed without on things, and at times not knowing everything that you need to know.
I love that quote. It took me a long time to convince myself that I was an idiot. I mean, that's probably what we'll open up the show with. That's a fantastic quote, because we've all been there. It's just a matter of when do you finally admit to yourself that you are an idiot. So you're finally starting to come around at this point. Yeah, Dan, I'm probably not as smart as I think I am. So what path did you start to take at that point in time?
Well, I'd like to tell you that everything went smoothly, but I go back to Fannie Mae and Freddie Mac, and that got me at least studying. Okay, and so then I actually played Fannie Mae and Freddie Mac one more time when it went from. It dropped down to about $1.15, and I had accumulated about 40,000 shares of it, and then ran up to 641, I believe. I didn't sell at 641 because I wanted 7. Yes, there are some lessons to be learned here in all of this, but still ended up being able to sell that in the. I ended up again this time when it dove rapidly. I said, okay, hold on, just wait a second and let it simmer down. You missed your big run. So I sold 30,000 shares of those when it was down in the $4 range. And that at least got me back to a point where I was like, okay, I can breathe now. But again, all of this is done without a plan. So consequently, when you're without plan, you end up bouncing all around. So I didn't know if I was a day trader, a swing trader, an investor, and consequently, I just kept losing money. It didn't matter what I bought. It wasn't working because without a plan, I was, and I think, Ches, you've used this before in the chat room. It's like the person throwing a dart at a dartboard. That's literally the way I felt, and still to this day becomes my biggest struggle and hurdle as I look at things, and I ask myself that all the time. What are you doing? What is your plan? And basically, it didn't matter if you win or you lose. If you don't have a plan, even the winners, you're going to turn around and take that winning. And if you don't get it out of your darn account, you're going to end up losing it because there is no plan. So the dartboard eventually is going to catch up to you.
And yeah, you're definitely not the only person to experience that. Like I said, you've heard me talk about that before. I think it's actually quite difficult, much more difficult than people think, to kind of find your quote unquote market identity, to find, where you specifically fit. But you're completely right in the sense that, if you come into it without a plan, sure, you might make a couple good trades, but more times than not, you're probably going to give it back in something silly that you probably shouldn't have done. And it's you got to find where your strengths are. And I think a lot of people just say to themselves, I'm going to be a day trader, and they just kind of, put their fist down on the table and say, that's it. There's no other way for me to do it. I have to do it like some YouTube video I saw. And it's difficult. I think that's probably one of the more difficult things to do, is to kind of find where you fit, where your personality jives with it. Because like you said, it's on top of having a plan, it's got to work with you. It's got to fundamentally work with you, and you have to be comfortable with it. We don't, I don't get blue in the face anymore. I'm sure, Clay, you don't get blue in the face anymore when you trade either, because you found where you kind of fit. But yeah, it's actually a really interesting topic. So you're without this plan. What did you realize that at the time, or were you just kind of bouncing from ticker to ticker and style to style still?
Yeah, I want to piggyback. That's a good question. I mean, at this time, did you actually think you had a plan, or were you acknowledging to yourself this time, I don't have a plan? Because lots of people are always telling Ches and I, yeah, I got a plan, and then you poke a little bit further, and you're like, okay, this person is totally tricking themselves. They think they have a plan, but there's a big difference between thinking you have a plan and actually having a plan. So, I mean, what kind of category were you in at this point in time?
I'm still that person who is not. I'm still not there, and to be honest with you, I'm still trying to find that niche, if you will. But I think I'm much closer than I have ever been. But still, I still look at trades to this day, and I look back on trades, and especially, I don't know how other people are. I tend to analyze losing trades a whole lot harder than I ever analyze a winning trade. And so I'll go back to a losing trade and I'll say, what can you actually explain to yourself and not lie to yourself what you were thinking here and why you were going and what you were doing? And quite honestly, I can go back to August 24th of this year as a day that I was trading, and I don't want to say I was planless, because there was at least some degree of plan to it. But anyway, it was a day that cost me a great deal of money, and in looking at that. That was the day of the flash crash, if you remember right. That again was another day of reckoning for me as a trader. So more a little bit of extra history there. I'm still not in there. I'm still trying to think maybe I'm a swing trader who's messing with day trades, so I'm kind of like still all over the map. And if you could see me right now, you'd see I'm like I got my Italian hand signals going on. So I'm lost still.
Well, I think you're. I mean, I know you're a coach and all that, so you're probably being a little hard on yourself. But I mean, I will say this: you post loss in the chat room, which is fine. I appreciate transparency, but I swear your losses always seem quite a bit smaller than those winning days that you've posted. So, I mean, is that a pretty accurate statement right now?
At this point, yes. I mean, and especially I will tell you this. So when things really started to come together for me this last year, I had to actually get a hold of Nate because my IC subscription had expired in March, and I got a hold of Nate, got a hold of you, I got a hold of Nate, got back into IC, and was making a commitment to, I need to learn what's going on. And I don't remember when you came out with the options course, Clay, but it was kind of during that period that came out. And so I believe I bought the options course. At that point, I'd watched Robotic Trading and Penny Stock Survival Guide. And I was going to put off until September going CTU. And June, I made a really good trade. I can't remember what it was in, but I made a really good trade. And I took some of the profits there, and I said, that's it, I'm going in. And July's a bad month for me because I'm on the road basically the entire month, but buying into CTU, and from that point forward, other than August 24th, my trading has improved greatly.
Why do you think that is? What's it about CTU that all of a sudden, not that CTU is a magic pill, so I don't want to come across like that. I mean, I'm assuming you've been putting in lots of hard work studying and such since you joined, right? It's not just you bought CTU and then everything
Bought
turned
CTU
around.
and now he's got a Lamborghini. Leave it at that, Clay. End of podcast. Thanks for coming out, guys.
Yeah. Send us, you can send money to, yeah.
Clay or Jess can go get his coffee.
Yeah.
No, really what that did was it through CTU, through webinars, through study, that's been the biggest part right there. You know, I had an idea of what charts were, and you know, there's a part of me that was like, oh, Clay, yeah, right, come on. There's a company out there, NTech. Let's go back 1 year, almost.
Oh, NTech, yeah, I remember that one.
Went up to 10 cents. Do you remember that day, Clay?
Yep, I remember NTech.
I was plenty green that day, and you came out and said that you need to be careful because of the daily candle that appeared. And I'm like going, Clay, what are you talking about? Clay, come on, you're wrong on this one, man. I'm telling you right now.
I thought I was being dramatic or something like that, you know. So dramatic.
Okay. Now trading at a penny. And so again, that was a year. Then so fast forward now. So now I go back and I'm like, Clay was right on that one. Maybe this Clay guy's, you know, maybe I'm not giving him all of his due. And so that's when, as I said, March came along and I really upped in IC. Then I got into CTU. And the bottom line is the trading has improved because the study has improved, the plan has improved, and thus the losses, for the most part, are getting smaller, and along the way, I think that the allowing myself to understand what I'm doing, the winning trades are getting bigger. And why is it that we as traders are okay with looking at and I'll take me as an example, looking at a $500 loss, but rapidly getting out at a $150 gain. You know, it's like, I'm like going, I don't understand myself in that regard, other than if you don't have a plan, you're going to end up there. So those things are beginning to balance themselves out, which I think is helping.
So have you, have you gone through the risk versus reward trading course yet, or are you still working your way through some of the courses?
No. I haven't studied RVR as well as I need to, and where I feel like that's coming up more in trading for me personally, and that is when we do our webinars and seeing the 3-to-1 is a good example of that for me, where I'm more swing trade than I am day trade. So I will move myself into and I'm trading options primarily, and I will move myself into a position, but I usually am out 2 to 3 weeks as I'm doing that. And so I'm concentrating more on longer time frame charts, and then when you delve right into, when I watch and I delve into looking at a 5-minute chart or a 2-minute chart, it's a little bit less magnified for me or important to me, although those charts obviously are important as I'm trying to get out of a trade. So
gotcha. So I want to touch on it a little bit. You know, I know that you're trading options now, and why did you decide to start looking at that? You know, were you tired of the penny stock shuffle and dance? Did you think options would work better from a longer term, maybe swing trader perspective? You know, what kind of drew your attention that way?
I was really tired of trading stocks that were so very low. And you know, I get down there in the below $5 range, and the volatility, trying to jump in on a momentum stock, which is always my biggest, if I'm going to say one thing, I'm just like, those there are the ones that have really hacked my account over time, the greatest, trying to jump in and go, okay, well, this stock's on the move, I'm going to jump in there and buy it, and inevitably, but without any plan before I'd jump in, buy it, and how come I always bought the top and sold on the way down? Because again, lack of plan, obviously, but I felt like options was going to be, for me, the best way to trade quality stocks that at the time I didn't realize. That the volatility factor was going to be able to work in my favor as much as I understand it now. Does that make sense? I was, again, still, and I really I really need people to, if they're going to look at me and understand me, it is trading without a plan was the number one problem that I experienced, and continuing now to try and understand myself as a trader, the plan that I'm trying to take, what I'm trying to get out of it. That's where I have to continue to get better, and that's where I'm really concentrating on.
Yeah, I wanted to comment because you made a good point. You understand the volatility better and all that, and a lot of people say, oh, you can make a lot of money in penny stocks because they're volatile, they'll move big, this and that. But the whole difference between volatility in penny stocks and options is something called liquidity. And for you longtime listeners, we've been over this before. But liquidity is the ease at which you can sell, get out of a position. So just because you can buy something, selling can be a whole different ballgame, especially in penny stocks. So sure, they're volatile, but you may not be able to take advantage of that volatility because volume was not going to allow you to. Whereas with options, it's a much more liquid market. So volatile moves and the volatility, you can, much more, I'm not going to say easy because nothing's easy in the market, but it's much more efficient to be able to capture that. Would you agree with that, Ches? I mean, that's a pretty, I think that's, the big difference between volatility, penny stock volatility versus options volatility, right?
Right. Yeah. There's nothing I could say against that. And I completely agree 100%.
And I'll just add to that, and Clay, your course does such a great job of it, and I don't want to give away too much about a course, but the bottom line is that understanding that liquidity and volatility with the volume within those options was something that when I first jumped in, I wasn't nearly as mindful of as I am now. And again, part of it, I don't know how other people are, but part of my issue was and has been short-term success immediately upon arriving someplace. The first two option trades I made, one was in Home Depot and one was one was Nike, and I look back at those two trades now, and I go, I can't believe that I was able to get in and get out because I was dealing with really small volume, and then I really dove into the options, and I realized, oh man, I missed out. I didn't really latch on to why do we need 100 share volume position to be able to be involved in something? I missed that completely. And again, so thus I can look at that and say, hey, my first two trades I made money on. That was awesome. And then I bought something else that didn't have any liquidity, any volatility, any liquidity. And I went, well, I lost. And again, had to learn along the way. And I'm not always the sharpest tool in the shed. So I had to learn along the way and understand what it was that was going to lead me to success while trading that.
Well, yeah, welcome to the shed, because I'm back. I'm in the dull section too. I think anybody that's honest with themselves says, yeah, I'm in the dull section. I mean, anybody that says this place is easy and they're sharp and all that, I'm gonna have to disagree with them, because there's a lot of learning to be done. But I think that's pretty interesting. I mean, just liquidity, volatility, little tiny things within the options market. But I mean, you just got to understand how those things work in order to, make sure that it doesn't come up and bite you. Because like you said, all right, yeah, you first couple won, but then all of a sudden you still weren't paying attention to that stuff, and it got you on the next one. So, but now that you have, like you said, gone through the course and stuff like that, you're understanding the logistics and dynamics of things. So, that's a step in the right direction. I'm curious. So you're using charts and stuff. What kind of strategy do you like to use from a chart perspective? What if I were to look at your chart, what sorts of things am I going to see on it?
You're going to see lots of lines. I'm a big one for following the moving averages. That has grown on me. And again, so many things have grown on me from discussions within the IC chat room. I've been hurt the most by too big a volume as I've bought too many contracts. Someone named Ches said that had said to me at some point during a chat a while ago that you should look at your volume. You're probably trading too high. And I went, Ches, what do you know? August 24th. Ches, what do you know? And he was exactly right. Hooch talking about moving average and how important that was. And I know that was in a time when he was actually struggling, but it was something I just latched onto. And so moving averages are going to be very important to me. How a stock is moving, trend as a swing trader, trend becomes, I think, greatly important. And that was something that I fought because for whatever reason, I want to be a contrarian. Like stock's going up, okay, it's coming back down. I'm going put. And so I have to fight that. So if you're going to look at me and you're going to look at my charts, you are going to see many guidelines that I like to have on there that I'm looking for key points and key breaks. And some of those are through top-down analysis. They'll go all the way out to I'll go weekly, even as far out as weekly. So it'll be weekly, daily, and then right on down from there. And again, just as recent as 2 weeks ago, when we had a webinar and Yount was talking about a 15-minute, and I was like, that 15 minutes seems to me to be as a swing trader kind of a sweet spot for me as I look down from top down and to be a swing options trader.
Well, I just stopped listening after you said I gave some good advice. So I just want all of our listeners out there to realize that at some point I talked to Dan and I gave him good advice. So that's
every blind squirrel finds a nut, Ches. Every blind squirrel finds.
There you go.
I gotta make a comment on this because it really goes to show, first what I can't stand. Follow my system. I'll teach you the exact way to trade. Blah blah blah. And why trading is just not an exact system. A little context on the webinars that are part of CTU. I've been interviewing members, and we just interviewed somebody a couple weeks ago. Yount, and he's been on the podcast, but he was talking about how he day trades, but he uses the 15-minute candle to day trade. And now we just heard Dan say that his sweet spot as a swing trader is the 15-minute time frame. So that's stuck at wow. So we have a day trader using the 15-minute, and then we have here Dan, a day trader whose sweet spot is a 15-minute. So my point here is that there's many ways up the mountain. There's many paths. You just got to find what you feel most comfortable with out there. And the only common thing between the two of them, between Yount and Dan, is that they're using charts, right? So the chart is the universal tool, but how you're going to use that tool, where the sweet spot is, I like how Dan said that. That's where you got to figure out your personal risk tolerance, your personality, and then that's, what's going to help fine tune things. So very interesting point there. So I think Ches had a question about being a loser.
Yeah, Dan. So obviously, I think something that sets apart, a newer trader from someone who's been around the block and usually more times than not been beat up more times than they've kind of stood on top of a high mountain and success and victory. But how do you mentally deal with a loss now, after some training and after some time here in the field compared to how you took a loss when you kind of first started? I know you've had some great trades regardless in both the beginning and now, even when you've kind of changed gears. But when you have to take a loss, how is it now compared to how it used to be?
And let me piggyback again. because it sounds like your problem was always not taking profits when you should have. A lot of times, when it was going up to 6, oh, it'll be 7. When it's at 5, oh, I want 6. So also from that perspective, is it getting any better to lock in those profits along the way?
Yeah, and I sat down and just looked at a kind of a weekly, kind of did a little weekly trading diary, and there's good and bad in everything, and man, I mean that for people who, when somebody sees a profit and loss by me in a chat room. What they need to, what I would like people to understand is that profit and loss I should probably more post percentage, because the amount of money that you have available to you to trade changes and should change everything. And I know we've got people who are trading now with $100 account that are like doubling it up. Well, that's great trading. And so in my case with that, and to answer first Chez's question about the loss, I feel like now, and especially the last 5 weeks, I'm risking less. And so by risking less, I'm also taking profit quicker, especially early on. I'll trade anywhere between 3 to 10 option contracts, and some of that depends upon the amount of the stock. If I'm trading Amazon, IBB, SPY have been the main things that I've been trading. Amazon being as expensive as it is, I'm going and I'm trading 2 or 3 contracts there. SPY, I'll trade up to 10 contracts and then work from there. But on both, I'm very, very quick to take profit on an initial basis. And people would say, well, do you follow a chart on that? To be honest with you, I kind of don't. On that initial, I just want to get some money and get it out of there. And so
I'm the same way, Dan. I'm the same way. I want to, those first, people give me people make fun of me all the time, and I know it's just in good fun about my 9 cents, but I want that 9 cents, and it's what I found works, and that's not based on anything other than that 9 cents. So Dan, I'm fully with you there. It's a whole lot easier to trade when you've started to mitigate some risk and put some money into your pocket. So
well, there is another category of trader, Clay. I mean, we've got a day trader, a swing trader, and an investor, and then we have a clay trader. And the thing that I love about that, though, honestly, the thing that I love about you, and that is, I look at things and I watch as you jump in and jump out on one of your videos, and I'm like going, man alive, I don't know what he's using for a chart, but he was in and out of that thing in a millisecond. But the point being, and I say that again, you that is your sweet spot, and good on you for knowing that and for following that plan. And I know Chez is in advanced options, and that's where he's finding that's best. And I'm like, hey, I just want to succeed myself, and I want to watch others and how they do it. Man alive, to me, it's like, however you're doing it, if it's working and it makes sense and you have a plan, then that's what you should do. I think that's what we're all trying to find. I know that's what I'm trying to find, and that's what I continue to work on. And again, the loss part for me is much more, number one thing I have to do is I have to make sure that I don't revenge trade. So normally what I'll do when I take a loss, and again, you need to understand, I can lose $1,500 on a trade. That happens to me. And so I have to just get up, walk away, and take a deep breath, come back and reformulate. Normally, I don't trade a lot of, I won't come back to the same ticker a lot of times in a given day if I've taken a loss on it. I'm not good at yet at changing direction, rapidly. So a lot of times I'll get up, I'll walk away, take a deep breath, And when I say walk away, heck, that might be 15 minutes, 30 minutes. I need to, until I calm down, I'm going to get away from my computer, and then I'll come back, and then basically start all over again, reformulate a plan, and say, okay, now we got to figure out what we're going to do next. And we know we've got that loss hanging out there, but I'm not going to let it eat at me to the point of turning one small loss or medium-sized loss, however you determine it, into something even greater. That's what I'm trying to avoid.
Isn't it amazing how a little walk like that, 15, 30 minutes, how it just kind of mellows out your mind? I mean, it's crazy how that works. I mean, at least for me, do you find the same kind of, I don't know if calming effect is the right word, but do you find that it makes a pretty big difference just to physically and literally get up from your computer and go for a walk?
There is no question. And like, I think one of the dangers for me as somebody who's trying to swing trade right now is spending too much time looking at my computer. Because as a swing trader, if you're constantly looking at the numbers changing, my psychology, I'm like going, well, should I? Well, shouldn't I? You know, and then it's like, wait a second, what am I doing? And I'll get up and walk away. You know, it's like, hey, you know, that thing's gonna move, you know, pennies. You better just get up and leave your computer and not pay attention. So, walking away, I have a Post-it that I have that says. And again, this is something that when I violate this rule, it's normally when I get in the most trouble. But the Post-it says, normally the best thing you can do is nothing. And
I love it.
I mean, entering a trade, exiting a trade, it's just the power of hitting that enter button is unbelievable. And it's been, and that power has been. I've felt both ends of it. So that's again, when I violated that, that's when I have created the most headache.
Yep. People always forget out there, and I try my best to remind. You know, there's 3 types of trades you can make out there. You can be buying, you can be selling, or you can be not doing anything at all. And not doing anything at all, like your Post-it note says, a lot of times that's probably the best thing you should be doing, because the last thing you want to do is force a trade. So remember, there's 3 types of trades out there, and the one of them, not doing anything, you know, that's not a bad trade at all. Well, Dan, we're going to start to wrap things up, but Ches, you know, Ches likes it quite a bit, I think. So I think he would give you, I mean, he gave you some good advice, so I'm sure he'd be willing to lend you his time machine that he owns. So if you could go back to the start, you know, what bit of advice would you give yourself?
Oh man, it would be really simple, and that is paper trade. Learn what you are doing before you take and put your actual financial your financial future at risk.
Yeah, and I mean, I think it's safe to say that a lot of people don't put enough thought into that, in the sense that, you know, when you take the reins per se of your financial, you know, independence, freedom, retirement account, whatever it is, you know, you can't just kind of hop in and put your toe in the water. You know, you need to know what you're doing, because this is not, like Clay said, this is not a video game. There's no reset button. So, you know, hone your craft first and then do it. I couldn't agree more with that.
And I can expand upon that, and I'm gonna use a bit of a basketball analogy here, if I could.
Please do. I'm a big fan of analogies. Unless from taking my courses, maybe you already know that, but yeah.
And you are.
I welcome analogies.
And by the way, you are a great teacher in that regard. Way to go. The only thing that you need to be qualified for to be a trader is money. So you're taking your money and you're going into the realm of, I want to say professionals, but even more so, algorithmic computer trading. So it is like me, I got a ball, I got a basketball. Well, I'm going to join the NBA. That's what we do in trading, which is just like crazy. You know, you just because you had money, does that mean that you're ready to compete at the professional level? No different than just because you have a ball doesn't make you ready to, and not only that, but by the way, you didn't even practice. You went right in and played in a game. That's what you're doing with your money, and so that's why I say the time machine would be for me clearly study. I wish the first $2,000 that I ever took and spent would have been what I did in June or July or wherever it was of this year, because that right there was the best investment I made, because that gave me access to what I needed to do to become a better trader. And it only took me 4 years and Lord knows thousands to get to that point. Man, it's an easy time machine for me.
Nice. I'm gonna take this analogy another further. So you have a deflated ball. So a lot of people have a deflated ball. They're like, okay, my ball is deflated. I'm not ready yet. I just got to pump up the ball. So then they go out there and they watch some YouTube videos. They read some random blogs. They, do this, that, or the other. Maybe they join a chat room for hot stock picks and I need buy and sell alerts. Okay, now my ball is inflated. Now I can go join the NBA. No, it doesn't work like that either. Just because you inflate your ball by a lot of these means, joining, a lot of people use the ball inflation as I'm going to join a chat room that offers buy and sell alerts. They're going to tell me when to buy. They're going to tell me when to sell. There, my ball's inflated. Now I can go compete against the professionals. I can go join the NBA. It takes more than just inflating your ball and having a ball. There's a lot more to it. So I think what Dan is saying, and correct me if I'm wrong, he wishes his ball inflation would have been, joining, just investing more in his education up front. Is that a pretty accurate description of the analogy?
That would be 100% correct. And again, for whatever reason, as it relates to the market, we don't use the aspect of everything that you do. And we'll get back to the basketball analogy. It's a game of fundamentals. Well, guess what? Trading is a game of fundamentals. If you don't have the fundamentals, you're not going to rise to the occasion. You're going to sink to your level of preparation, and therein lies, that right there. Just like for me, you better be prepared. You better be prepared.
Well, Dan, it's been absolutely awesome having you on. But this next question is probably the most important one of the entire podcast. It's the one that determines if you get to stay in the inner circle and, here at claytrader.com. And that question is, drumroll please, what is your favorite movie?
What is my favorite movie? Yeah, you would think it would be I am a sports guy, but this is probably going to surprise you a little bit. But
Annie,
my favorite movie, it was probably and is the movie The American President. And if you haven't watched it, watch it.
Okay, I'm right. I have not seen that. I'm writing it down. So The American President. I can. Will definitely be. My wife and I just got another movie to the list. So what about your favorite food? So what's good out there in California?
Well, I don't know about California, but let's make it this way. Ribeye steak with a load of baked potato and Caesar salad is going to be the meal of choice for me. We have Sunday night. We have red meat Sunday around here. So that would be, that's how I know my kids are always going to come home and visit.
Very good, very good. Yeah, I think that one spans more than just a region there. That's always good.
That's America right there.
Yeah. Now, are you a dessert guy as well or no?
If I were a dessert guy, I'd weigh 270. But I am a fan of. My wife makes homemade chocolate chip cookies, and she doesn't make them very often. But that would be my dessert of choice right there. A glass of cold milk and some warm homemade chocolate chip cookies.
Again, that's America right there. I mean, it doesn't get any more American than that.
My wife's Canadian, though, Clay.
Well, and I guess my wit's not that quick. I'm trying to think of something funny to say, but I'm failing miserably. So let's just move on to the next question. What do you like to do in terms of, hobbies? And let's leave sports out of it because, I mean, we know that you're a coach in that realm. So what about other hobbies? Well, not that that's a hobby. That's a job for you, but you know what I mean.
Well, I'm frozen right now because you said I have to leave sports out of it. My hobbies outside of my occupation I enjoy playing golf. I have a son who's basically a scratch golfer who's also a coach, but so that's become a lifelong thing for us. And then the next thing I'd say that my next enjoyment is we've got a little 16-foot whaler type knockoff that, and we have about 1,500 miles of waterway here known as the Delta. And hanging out there with my lovely bride probably is as good a day as it could be for me. Out on the water, quiet, away from my cell phone and away from the computer. That tends to be a great enjoyment.
And I know Dan's probably got the boat that says "Money is no object" on the back that we saw, Clay. I'm sure
that was right.
That was Dan's.
Yeah. Shoot, we should have invited him for crabs then. Bummer.
Yep. Yeah, the penny stock boat. That's what we'll
that actually is it's a hand-me-down, and the name of the boat is the Lucky Five. And we have 3 kids that are all grown, and my wife and I have been married for 33 years, and the Lucky Five is really how I believe that we are.
Awesome,
Great.
awesome. That's
Great.
well, congratulations on 33 years of marriage. That's fantastic. I got to ask you this though. I'm going to rephrase a little different. I know you do quite a bit of traveling for your job. So what's one of the neatest places you've been?
Ooh, that's interesting. I've been I fly only because I have to. That's something that you should realize. I tolerate it. But was able to go on a foreign tour over to Spain and spend 10 days, and that was clearly a highlight. One of the highlights. My wife loves the sunshine, so between Spain and we've enjoyed more than one trip to Hawaii that we really enjoy. In other places traveling, shoot, it's all over the country that I travel. And the only thing I can tell you is that I really enjoy the water. I really enjoy the coasts. So all of you people that are in the middle, I'm sorry. But I would choose to be somewhere in the extremities, if you will.
Come to West Michigan. We'll take you out to the coast. We'll take you to Lake Michigan.
Well, you didn't ask me my favorite band, and you know.
Then what's your favorite band? If you know the questions, then
Bob
we'll ask you
Seger
whatever
and the
one you
Silver
want.
Bullet Band. Bob Seger, and is he not a native of? Is he a native of Grand Rapids? I believe he may be.
Is he? I don't know. I didn't grow up here, so I don't know my Grand Rapids history. So.
Oh, okay.
I'm from the great state of Ohio, so but we'll just end it, leave it there for now. So I mean, but yeah, he may very well be. I would bring on producer. That sounds kind of fancy for Nate, but he's the way we have it set up because he should know his Grand Rapids history. But I don't know. That's an interesting. If it's true, that's kind of cool. So what about final question here though? What are the 3 words that you would associate with a successful trader?
And I didn't really pay a lot of attention to the questions, but I did kind of focus in on this one. It's 3 right off. It was easy for me to come up with: studied, planned, and disciplined.
Studied, planned, and that's pretty much the flow of how things go. You got to study in order to know how to do a plan, and in order to execute the plan, you got to stay disciplined. So yeah, I can tell you're a coach. Everything in your mind works in a very fundamental yet logical way. So I want to thank you for being on the show, Dan. It was a pleasure. And like I said, I know you have a hectic schedule. So I appreciate you, swinging by and, taking some time out of your Saturday morning.
Yeah, and I can tell you this from my perspective. I was very nervous about this because you have to now, when you do this, speak and expose yourself. And that's never easy. But congratulations to you guys, because you guys do a fantastic job putting these together. And I hope that somewhere along the line somebody gets something out of this.
Oh, no, I have that ball analogy is fantastic. And that'll affect at least one person. A lot of people are going to still be like, oh, what do these people know what they're talking about? I think you can relate to that. I think we can all can relate to that. But there's going to be at least one person, I can make that guarantee to you, that's like, hey, that person's right. And wasn't as, I mean, you were nervous, but did you have a pretty good time, or is this one of the worst experiences of your life? And I say this because people are always like, oh, I'm so nervous. I'm so nervous. Is it really anything to be nervous about, or me and Ches somewhat normal?
No, and again, I think the nervous part is more that for me, the nervous part was, hey, I have to visit some things here that you know, they're not the most pleasant of things, and so and then the next part is actually trying to verbalize and make some sense of yourself while you're doing it. But again, that's where you guys come in, and you guys do a great job of not only with your questions, but keeping the focus on an experience that others just may get something out of. So congratulations.
Well, you did. Thank you very much. But you did a fantastic. You make our job easy, because I think Ches and I, we just sat and listened and, kind of enjoyed ourselves. So thank you again. For those of you listening, if you want us to keep on making these and keep on interviewing people, there's some very simple things that you can do. If you're listening to this on claytrader.com, leave us a comment, click that share button. When we see shares go up, I mean, we know that people are finding this helpful. And especially if you're listening to this on iTunes, leave us a comment, leave us a review. And like I said, when we see reviews coming in and they're positive and people are saying, hey, yeah, I find this beneficial, then, we'll keep putting time and effort into making these. So those little things really do go a long way. So thanks again to Dan. Thanks again to you as listeners, and we will see you back for the next episode.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.